Okay, this is called Curtain Raiser Conversation for the Monetary Policy Committee today. And we start from the marketplace, downtown Lagos, where two analysts are joining us for this conversation. We have a broader panelist here later in the afternoon, but let's raise the curtain on the marketplace. See some of what's the headline news, look at the current trends. What does it all mean for today's final MPC for the year? Let's join Victor Chiazo, who is the head of research at FSL Securities, is live in our studios at the Nigerian Stock Exchange. Thank you very much, Victor, for coming through. Also, at the Stock Exchange, on the trading floor, is a trader. And that's Rotimi Fakaijo, who is a capital markets analyst and is also live to us this morning on the show. Thank you very much, Rotimi Fakaijo, also for coming through on the show. But let's start the conversation with Victor. Victor, let's tee this off with you. If you look at the headlines and stories in the news and what have you, look at policy actions in recent weeks since, let's say, technically second half of the year. What does it all tell you about the decisions that the central bank or the monetary policy authorities have taken so far and their impact on the market street?
Yeah, Bosun, once again, and thanks for having me.
Thank you.
If we want to look back from the first half of the year and what the CBN has been trying to do, trying to push the economy forward in terms of GDP growth, as well as also maintain price stability. I think it looks like the CBN wants to eat its cake and have it. And if you look at what's been happening, I think the CBN has more or less been succeeding in that regard, because if you look at all the policies that have been coming to play, some might say that some may not like what the CBN has done. But if you want to look at it critically, I think some of the policies have actually been positive to the economy, as we've seen in the last GDP numbers that actually came out. Yes, we're not yet out of the waters yet, but I think we're not out of the woods yet, but I think what's been happening and most of the policies that the CBN has been dishing out, it has more or less been fairly okay for the economy, and the economy, I think with time, will recover.
Okay, so if you look at inflation on the other side, yes, the GDP looks positive, but if you look at inflation and you look at capital importation reports, you look at balance of trade figures, the last set of economic data that we had, rolled that back a bit for 6 months, it tells you that that we still have a lot to do on the FDI side, on the macroeconomic side, than the market street side.
Yes, I agree with you, Bosun. Some of the data have been positive, while some have been a bit sticky. The likes of inflation has been on the rise since the border closure in August, and we've seen it go up from 11 to about 11.61 over the last 3 months, where we've seen inflation numbers. So that's one area I know the CBN and his team will be looking at closely. If you recall, in one of his meetings, the CBN mentioned that he feels that this uptick in inflation is just going to be partial, that prices are just going to wait for time to adjust to the border closure. And from time, once the Nigerian producers adjust to this border closure, we're going to see inflation inch further down, which for me, I think that might actually be a possible outcome. So far, we can get our productions up and running. Outside that, if you look at the trade balance has been positive for a while. But if you look at the capital importation numbers that came out, I think 2 days ago, that is something that may actually also be play a tricky part in terms of today's MPC meeting, because if you look at the total inflow, about 3.7% of the entire 5.36 billion that came in went to FDI, that's foreign direct investment, and about 56% was targeted at foreign portfolio inflows. That's more or less hot money. 40% went to other investment. That sends a bad signal to the entire market, meaning we have more hot money in our system. And regarding whatever the CBN decides to do today, might actually trigger more inflow or trigger more outflows. Because with 56% of that amount in hot money, if the CBN decides to tinker with rates today and sends a wrong signal, we might begin to see most of those inflows reverse. And if you look at where our reserves are below 40 billion, I think the CBN might really be careful with adjusting rates. So I think today is going to be a good one to end the year, and want to see how the CBN is going to react to all these numbers that are pouring out.
New yield curve environment, do you think is still encouraging for investors who had 14%, they've had 18% last year, a year and a half ago, they've had at a point 20% or a bit of that. So do you think this single digits is still, because now you have them, they can still play at 12%, they can still do 11% or thereabout via the open market operations and other. Do you think, including the NTB, do you think the banks and others will still be interested?
Yeah, Bosun, I think these are risk-free instruments. These are risk-free instruments. So, given the way the economy is at the moment, people feel that lending right now is risky. But you all know that CBN has increased the loan-to-deposit ratio for the bank. So definitely, most of them will be forced to lend. For December 31st, the loan-to-deposit ratio will be put at 65%, and anyone that doesn't meet that ratio would have most of his funds sterilized with the CBN. So that is on one hand. Then on the other hand, we have treasury bills going below 10%, yields going below 10.5. So that, some people may say that's not a decent return for me, given the fact that inflation is around 11.61. So real return is negative. But the CBN, clearly CBN is telling us that for the OMO auction, if you look at the OMO auction as at yesterday, we still have yields as high as 14% for the 1 year tenor. So that is still significantly above inflation figure. So real return is positive. But what the CBN is saying that we don't want to actually get local funding and pay higher rates for it, because we feel that the inflation numbers are just as a result of the significant rise in food inflation, which is actually pushing CPI higher. So I don't think they don't see that as a true reflection of the inflation figure for the entire economy. So I think CBN is comfortable with giving out below 10% for local domestic players who are investing their Naira assets, while for foreign investors who are bringing in the dollar, which is going to more or less keep the FX stable and so bring some level of form of stability in the system, the CBN is saying, okay, we can actually pay out more interest rates to this set of investors. And I think for us, it's a win-win, because interest expense will be down if you net it off, as against paying a total of 14% or 13% interest rate across board. That would have increased our interest expense element for the CBN. So I think it's a win-win. For the equities market, it's positive, because if you look at the next 2 days, that will be the last treasury auction for this year. There will be no auction till next year. So that excess liquidity that's coming into the system has to find somewhere to go. The only risk with that is that we hope the CBN will actually also monitor that space, that most of these funds don't go chasing FX, and that might actually put significant pressure in the FX market.
I'm sure the MPC members are listening to you, your advice. Victor, hold on a second. Let me ask Rotimi Fakaijo, who is seated on the trading floor at the exchange. He's the one who is a chartered stockbroker and who is a equities market expert as well. Rotimi, good morning. Welcome to the show here. What's your take on the recent turn of positive readings at the stock market? Let's start from there.
Well, for what it is now, there is actually no other way to it, because the money market is not as attractive as it used to be. And if for any reason any investor should invest in the equity market, even if for dividend return alone, I think it's more than good for anyone to come into. And also looking at the way the prices have trended, it makes a lot of sense to buy Zenith Bank at about 18 naira, 17 naira, UBA at the present price of 7 naira plus, and even Access that is fast coming up, at least to catch up with the likes of Zenith Bank and GT Bank. So all of these ones, especially in the banking sector, among the banking sector stocks, we have a lot of opportunity down there. And also, if you look at Dangote Cement going into the industrials, it still holds a lot of opportunities for investors, as the dividend yield for even coming from that is more than 10%. So relative to what you have in the money market, I think the whole attention is definitely coming back to us. And that is why we are experiencing the kind of upside that we've seen so far.
If you're looking at this, I just go a little bit pedestrian here, this plenty money. Let me just put that in a local parlance. This size of liquidity, at least from the central bank market side, we're looking at about 1.5 trillion naira. President Buhari ordered that minimum wage should be paid at least at the federal level on or before December the 31st. That's a jumbo money coming through as well. All of this, how much of it are you expecting on the equity side? And if they are heading your way on the trading floor, what sectors do you think investors should look into, despite inflation, despite GDP, despite what the central bank may do today in terms of interest rate decision?
Well, I think for all of that money, we may not see a direct inroad to the market through those who are going to earn the minimum wage. But at the same time, money always has a way to find its way to where it belongs. And I think the equity market is actually a destination at this point in time. So putting that into perspective, I think the sectors to really look at will definitely be the banking sector stocks. And maybe if you're looking at the industrials, Dangote Cement is actually a destination. And if you look at the food, the food and beverages, though Nestle is on high side, but I think it still has a lot of opportunities for investors as well because of his holding capacity. At least it stands very well at any point in time. So for me, I believe strongly that for most of the securities that are good, that have been paying dividend over a period of time, at least for about 3 years non-stop, I think all of them really look good at this time for investors to put their money into.
Okay, Rotimi, give me a second. You're going to react to it, but let me ask Victor, chairs in the studios, just sitting just across the door there at the exchange. Victor, let me ask you this. We've seen a bit of a raft of board changes by some of the listed companies in recent weeks and the last 1, 2, 3 months or so. What's your take on this raft of board changes? Well, some of them are just retiring, like Austin Avuru of Seplat. Victor?
Most of the board changes that we've seen has been as a result of new ownership coming into the system, while some has been as a result of most of the directors retiring. So clearly, some investors may actually see this and want to actually say, okay, before I put more money in this company, I feel that 1 or 2 of these directors has been a major source of positive performance for this company. So we'd like to see who will be replacing these directors and what they will be bringing on the table. So I think despite the changes, if you look at the names that are coming in, like Austin Avuru is being replaced by the CFO. So clearly you expect some form of continuity in that system. You don't expect that any form of shock as against bringing in a total stranger that will be coming into the management of the company. So I think these are areas where investors should be looking at to try and make sure that there's no disruption to service, and you begin to see a company who has been doing well over the years begin to post negative numbers and erode investors' return. So that's also a critical angle where investors need to actually watch out.
You've seen this already. This came in yesterday from the stock exchange, but of course, 40 Oil PLC just held an extraordinary general meeting and changing the name of the company, 40 Oil PLC, to Adova PLC. This is one company whose name has changed a number of times since the days of being British Petroleum. Victor?
Yeah, Boston, it was actually expected. It was actually expected because if you recall, the company Hotel actually divested his holding a while ago to new owners, and after a few weeks after that transaction was tidied up, we recall that there was a change in management. The CFO, the CEO were actually asked to go, and they were replaced with new management. So this was only more or less consolidating on what they've already started. I think the new ownership will want to bring in a new name and actually steer the ship from there. So at least they can know that, okay, this is a dawn of a new era for the company, and from there they can actually track their performance. But one thing investors also most likely always look at is that despite you having a new CFO, a new CEO, a new company name, historical performance will actually remain key, because investors will be looking at what have you done since taking over this company compared to what the last management had done. So if you had profits of about 10 billion, 20 billion, 50 billion last year, and this year you're reporting 30 billion, 20 billion, 20% reduction in profit, there's no name change, no CFO change, no CEO change would actually make investors remain in their company. You begin to see investors fly to safety. So the most important thing is efficiency, is performance. Investors want reward for any single kobo they have invested in any company. So I think the management will actually have that at the back of their mind, and they will want to see profitability increase for that company in the medium to long term.
Some of the changes we've seen so far, let me, Rotimi Fakayijo at the floor there, it has to do with the Dangote Industry Group. Dangote Cement is there. Then finally, Dangote Flour has been delisted from the stock exchange following the sale to Olam, Crown Flour Mills and others. So this is the second time that Dangote Flour will be exiting the market within the last 10 years. The first one was to a company in South Africa. So would you be missing Dangote Flour on the counter at the exchange? Rotimi?
Yes, we definitely will be missing, because one is that it has depleted the market capitalization, and two, the good number of investors in that particular company definitely have to put their money elsewhere. Although they got a bumper pay by the time they took them out, that is when Olam took over completely. But at the same time, I believe the continuous stream of income that will have been coming is definitely come to an end. So I believe now we will not really like any company that is as strong as Dangote Flour was to actually get listed, because we are actually expecting more companies to get listed on the exchange. So definitely we are going to miss Dangote Flour.
Okay, so finally, to both of you, we need to wrap this up in about 1 minute. What's your take, Rotimi Fakayijo from the trading floor, what's your take on today's monetary policy decisions, hold, raise, or cut?
Well, I believe what we've seen, I believe it's going to be hold. I don't think that we're going to expect any change at all.
At 13.5%. Okay, let's, Victor, what's your final take?
If you want to look at it critically, the ideal thing would have been for the CBN committee to actually cut rates. But I don't think this is an ideal situation, because a lot of factors come into play. So I think the CBN would want to restrict sending wrong signals to foreign investors. They will want to see that capital importation numbers actually increase to keep their reserves at a steady level and keep price stability. So I think today, I expect the MPC meeting to hold status quo on all policy parameters.
Victor Chiazo from FSL Securities Head of Research, and Rotimi Fakayijo, a stockbroker and a capital market analyst. Thank you both for your time this morning. We appreciate that. See you next time. Let's have a break, everyone. We'll be right back.